Well, good afternoon. Welcome back to the Economy Wellbeing podcast. I haven't had a show for quite a while, so nice to have my friend Lorraine Smith back. B Lorraine, I'll ask you what B stands for. And does it stand for being or B or Bernadette?
That's right. It's just the esoteric bee. Well, first of all, Mark, thank you so much for having me back on the show. It's great to see you. Great to be back. Great to have just hung out in real life too as a special treat. So thank you very much.
It was a great treat to be on Manitoulin Island and seeing you in person and visiting some awesome bakery um, and your whole story too about you know having a connection to Sudbury and growing up in that area. But today I wanted to talk about your interesting experience of as an expert in sustainability, investment, accounting, measurement, verification. Your story, which I found quite compelling in your own call it monologue, was the story of you realizing that a lot of things you thought were uh, ethical investments were in fact problematic in terms of your understanding of how these investments were actually contributing to any form of well-being at all, and uh, and then subsequently your choice to divest, to go into cash, and then my question, I guess, the interesting question for the uh, you know giant listening audience I have, not is what do you do? What did you do next? Where does one invest your money? As discussion I've had about, well, who do you bank with? And these are big questions a lot of people
Yeah.
scratch their heads about, and I think enlighten us as to what your journey and where you're at now.
Sure. Thanks, Mark. There's a lot there. Maybe I'll start with the really easy question that's still lingering off the top, which is what does the B stand for? Which is my middle name is Lorraine. My first name is Bonnie. And I was named after my grandfather, who was known as Benny. And that was meant to be my middle name, but Lorraine Bonnie, which is close enough to Benny, didn't ring very well. So they just switched it around and put the conceptual first name second. So I go by Lorraine, named after my grandfather Benny, first name Bonnie, no big deal.
That's awesome.
There's a few stragglers out there, fun people. Hey, John. Hey, Sam. John, John Elkington is one of the few people in the world who, for some reason, still calls me Bonnie. But that's a whole other story.
Wellington. Oh, interesting.
Yeah, yeah. And I don't know why they sort
That
of took.
goes way back.
Yeah,
Triple
he's been
bottom
a dear. Oh, exactly. He's sort of created the groundwork on which many of us walk. And maybe that'll segue me into what am I up to, because I entered the field of corporate responsibility working in Canada for Canadian Business for Social Responsibility in 2003. Long and winding road that took me to New York City in 2009, where I began working for Sustainability, which was the company that John Elkington founded.
That's right.
And after a while, I headed up their New York office and was there for a number of years. I left that role in January 2016. That was my last sort of formal paycheck, being on payroll with a company. And after that, John had actually already left sustainability, and going freelance in 2016, I began to collaborate and partner a lot more with John and a number of others at his team at Volans. That's when I sort of became Bonnie, which is the sort of inside joke that's probably not even that funny. But all to say, when I went freelance back then, it was because I started to see that the mainstream sustainability and ESG, or environmental, social, and governance strategy, investing, and communications world didn't really offer what it said on the tin. There's a lot of very ambitious ideas and programs and goals and budgets and teams and great people, but it really didn't seem to be changing the challenges it was set up to change. And I came to see that perhaps it was even just making them worse, or just sort of apologizing for or excusing them and keeping a lot of really hardworking, well-intended people busy, but not really doing the work. And not that I want to put words in John's mouth, but I know that when he left sustainability and founded Volans, he was very much trying to push into a bigger, more system level universe. And he can certainly speak to his journey there. But even after doing a number of years freelancing with the likes of Volans, I did a lot of work with the UN Global Compact, with some very ambitious Fortune 500 companies that would bring me in as a hired gun because at this point I'm independent. I can decide how I spend my time. I'm my own boss. To be very candid, it seemed to be worse than I thought. It wasn't even just that, working at the fee for service consultancies that I'd been in, that business model is problematic. But even on my own, picking and choosing my own clients, being as courageous as I could, and really pushing for ever more ambitious goals and practices within companies. I finally in 2021 stepped away from doing that sustainability consulting work. And I'll touch more on the financial piece in just a moment, but I just want to clarify that's the world I came from, was essentially sustainability consulting, Fortune 500 companies, usually the strategy level, so the headquarters of the company, cross sectors. So I worked with food, energy, forestry. I'm a Brazilian Portuguese speaker, so I did a lot of work with large companies in Brazil. I'm Canadian, but I was living in the US, so I got tapped for a lot of like big mining, big energy, but then also the retail and recognized brands. I'm also a German speaker, and so I got to do some fun stuff
Sounds good.
overseas in Europe. So some neat automotive and chemistry companies based in Germany,
Like BMW and
like BMW. Yep, yep, and a couple others. So I feel really blessed in that I got a sort of a front row, or maybe like backstage pass to a lot of industry activity at a relatively senior level. And also at a kind of ground level. So I went onto plantations. I went into big ag fields. I went into a lot of manufacturing facilities, food manufacturing, but also hard goods, and quite a range of flavor molecule manufacturing facilities. I know a weird amount about the ingredients in food.
of course,
And
because you read the labels. Right.
well, yeah, when you read the labels and you've been in the factories, suddenly a word like flavor, which, maybe
Of
the
course.
discerning
Natural.
consumer,
Natural.
right? Natural. Maybe a discerning consumer is a bit like, yeah, what does that really mean? But I've actually been in the factories and seen it. And a big part of me is honored and inspired and awestruck by the power of industry and our
Mhm.
ingenuity and our ability to innovate and work in collaboration and do really amazing things. I mean, I like going into factories because it's like, I feel like Charlie in the Chocolate Factory, like going into these really cool places where amazing things are happening. But I also am aware and feel like I have been kind of my whole life. I think many of us have been our whole lives, that we are just part of a wider web of life, and that our industrial practices have not been designed in alignment with life's principles, with the way life actually works. And as a result, we're causing a lot of ecological harm, a lot of social and human health harm, a lot of probably spiritual harm. And we're increasingly aware of that. I think the sustainability industry, at least a good part of it, is trying to name that and do something about it. But it's sort of born into the very same system. So it doesn't really, my view, having been in there for over 20 years, is it doesn't really know how to see itself and redesign itself. It can't, kind of needs to
Yeah.
compost, become something else. So yeah, I stepped away from all of that in 2021. I gently fired my 7 active clients at the time, and decided to work towards a very different economic paradigm where all industry really serves life instead of serving the bottom line with a sort of sidebar of trying not to cause too much damage. That's
Right.
really what I've been focused on since then.
Wow. So it's interesting our paths didn't cross on before I was introduced to you by my friend Robert Delmer in Woking in England. But
Mm.
it seems like we have met the same people. And, I was in one of the founding architects of the Global Reporting Initiative Handbook, the GRI, and the launch of it in New York, actually in 2000, I think it was 2002 or something like that, or one. I remember with Mark Brownlee and his,
Mhm.
who you probably know as well. And
Yeah, yeah, yeah.
I was interested in. the issue of accountability, I've always been obsessed with it. And I think you and I maybe share that passion about, okay, let's verify that these claims, these outcomes we think are connected to industrial development are verifiable, right? And especially impact, and especially negative impact and things like
Mhm.
liabilities to nature. So I'm just, and the triple bottom line, I used to teach this corporate ethics, or so-called social responsibility at the School of Business here at U of A. And I was actually, as much as I like John's work, I thought, why three siloed bottom lines? What about
Mhm.
integrated? What if,
Mhm.
if you have three silos, then you can kind of say, well, I'm just going to focus on the, economic efficiency or profitability piece. And I can
Mhm.
put social and environmental over here, but how do they talk to one another, right? Was really my personal interest in then coming up with this well-being accounting system or platform. So I'm intrigued with your story, but I guess the question that I comes to mind, and is part of your story, is like when you look closely under the hood, or at these words natural, and or
Mm.
the UN SDGs, or all of these kind of lofty ideals, you find some problems. And I think part of my thesis is we have an issue with accountability. Like, as humans, I think we have a problem with actually being accountable for impacts, even if we attempt to measure them and honor those impacts. So, and this
Mhm.
kind of cult of efficiency and cult of profit maximization, which part is a mythology. It was never the aspects of accounting in the first place.
Yeah. Yeah.
So I'm curious your own story. So, and are also a weird connection. Here I am, being, potentially contracted by Canadian ethical funds in Vancouver, and
Mhm.
acknowledging to them that there is no way, as an ecological economist, that I can verify the ecological health of a watershed in which, a Sunoco gas station operates. That's the reality.
Yeah.
Other than, modeling this stuff and coming up with grand values out of some lofty lit review, which is not satisfactory. Because how do I measure the ecological health of Manitoulin Island or a lake or a wetland? With great difficulty. Therefore we're kind of on thin ice when we're trying to, report on impacts of our ethical investments when it comes to ecological, say, health or integrity. So, I acknowledge those complexities, but tell us more about your experience of then looking under the hood of your so-called ethical investments and find.
Yeah. 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 Oh gosh, there's so much I want to say. Let me just acknowledge first that you've mentioned something that I think is really important and is a lens that no matter what I'm about to say or what I'm doing, I I feel that lens, which is like we can't really articulate the value of a healthy watershed. We can't really tie profit to well-being. We can try and we can put our very powerful intellects like yours and maybe mine and lots of others and our collective knowing in the kind of paperwork sense of knowing, but we're just using our broken technologies like our language, our cognitive capacities, our teachings such as they've been so far. And we really are just one species that is 100% dependent on trillions of others. So I I'm not even pretending to be modest. I think I'm actually just being openly declarative about my inability to do what it is I think we need to do. And I'm going to talk about it anyway.
But
So,
I think
the,
that I think that's the wisdom of humility,
mm,
admitting, we don't know very much.
we don't really know.
A-
Yeah. Yeah.
and we can have the highest moral ethical aspirations, but
Yeah.
Let's
And
just
so even
admit we
though
don't know. Like,
yeah, exactly. And this is us finding out, in all the ways that we're working on things, and hundreds, thousands of others working on amazing things in parallel, most of which we'll never hear about. It's not Instagrammable and all the things. So that's a moment in the like humility department. Let me just switch over to the non-humility department and say that I didn't say much about what I do now. I will briefly say what I do now in terms of keeping the lights on,
yeah,
and because
that's
I'm not doing sort of hired gun consultancy. I did a lot of reporting and transparency. I really believed in the power of the GRI, of the IIRC, the International Integrated Reporting Council, of the SDGs. Oh, the diagrams I made with those pretty
oh,
colored
lovely.
boxes. And I respect my past self for her enthusiasm and excitement and kind of mapping habit. But I have retired her. She's allowed out once in a while, but not much because not that I think those are bad things. There's a lot of good housekeeping, good homework in there. Um, but good housekeeping doesn't make a good house. Like the foundations have to be built on something that has real integrity, or all the tidiness in the world is not meaningful.
Good point.
Uh, Let me also just name drop for a second because I can, and because I think it matters how some of what is in the wider world comes to be seen and known. And so I want to make more of myself visible in that sort of wider scaffolding. So we're talking about John Elkington, who coined the term the triple bottom line. And I think of him as a dear friend and a great elder in our community. And I'm proud to know him. And I hope, John, one day you hear this and that you don't go, Bonnie, what are you on about? And
Yeah.
so John will back me up when I tell you that he published an article in the HBR, Harvard Business Review, and I think it came out in 2018, 2019, that was recalling the triple bottom line. And it got tons of press, press in the sustainability LinkedInery of it all. So lots of clicks and comments and all the things. And in that article, he was basically saying, I'm recalling the concept because for including the reasons you're describing, it's been kind of used and abused and created silos and trade-offs and things that were not what he intended. So why is that immodest of me? Because when I lived in New York City at that time and John was in town and I was collaborating with him across a number of meetings, I was making introductions for him. And I introduced him over breakfast to at the time, the editor of HBR, who was Adi Ignatius, whom I knew through some personal connections. And so I brought them together for breakfast and facilitated a conversation that led to John writing the recall of the triple bottom line.
Ah,
And I say that partly because I am realizing I should stand up for myself a little better, but also because uh, there is so much going on behind the scenes that doesn't make it into a visible fruiting body of the mycelium network. And so that's kind of me name dropping and saying, well, I literally made that article that I think was actually somewhat important. I made it possible. And that is one tiny representation of many, many, many other people thinking, doing, connecting, knowing, with names that are really not known, maybe not English speaking, maybe no publishing credibility or clout, whose work is very, very important. So I just want to put out a call for awareness of how much is happening that we don't see, we don't read about, and it's never going to be in HBR. Whether I introduce them or not is kind of a little
mhm.
immodest sidebar. But I actually do want to come to your question about what I did with actually, no, wait, let me just back up because I did a terrible job of saying what I do now, which led me to Vancouver Ethical Funds. So I don't do the
Raise
hired gun
goats.
stuff.
You're trying to raise goats. No, I'm just kidding.
That's right. Well, yeah. Oh gosh, Mom, are you gonna? I really do want to
And
get some
they
goats.
call you Bonnie, right? I'm just
Yeah,
kidding.
that's right. Well, I don't know what Button calls me, but there's this cute little kid who lives down the road. Anyways, but I live on planet Earth. I do not have a trust fund. I am not independently wealthy. I walked away from a fairly well compensated career. And when I go to the hardware store to get a fitting for the garage door, I have to pay with some kind of recognized fiat currency.
Yes.
So how do I do that? To be very candid, I am actively iterating my business model because I only want to get paid for things that contribute to an economy that serves
Oh,
life. I don't want to get paid for things that are part of the problem. So the number one way that I look to ensure that I have bread on the table, hopefully sourdough, is uh, by advising people, individuals, or organizations who are ready to be serious about their role in a life affirming economy. So that could be one on one coaching, that could be corporate advisory or team advisory. And that really is, in its simplest term, a mindset shift. But very few people ring me or probably you up and say, "Hey, I was thinking about getting a mindset shift on Tuesday." You know, you might book a hair appointment, you might book something you need done to your car, but nobody really calls and says, "I need a mindset shift," because most of us, for all kinds of good reasons, believe our mind is perfectly fine. It's the rest of the world that's lost its way, and we have to find ways to fix, correct, adapt. But also, most of us were born and raised in a cultural environment where it's perfectly normal to try to make as much money as you can, where you're probably going to work most of your waking hours for someone else for pay, and then look for work life balance where you'll do fun things on the side. Hopefully you like your job and you don't hate it, but that's a kind of rich person's problem in the cultural perspective.
person.
um
But
we Yes, or go ahead.
but in fairness, I was raised with a German immigrant father who basically came to Calgary with $5 left in his jeans, right? He came to New York with $100 and
Yeah.
realized the train ticket to Calgary was $69 from Montreal, right? So, and he taught us, the importance of saving,
Hmm.
of investment, and so we were all kind of brought up in that culture or that narrative, and we followed what we thought was good advice. Yeah, you can put your money in the bank, you can earn interest on your money, you can invest in a portfolio of stocks and
Yeah.
generate returns based on the market valuation of the stocks and get dividend income. And yeah, you followed all that, and if you're fortunate and you make 7% per annum and you do the math, which I think you and I are similar probably. I built the spreadsheets. I
Yeah.
From when I was 25, I could look out till now when I'm 65 and say, every year, are we good? Are we on track? Because
Mhm.
I just need enough then to live off the interest of that investment, even if I just have it sitting in a GIC, right?
Yeah.
Then the
Yeah.
problem is, what's the GIC invested in?
Exactly.
Right? So even if I'm r no, I've got a cash stock that's sufficient to
Yeah.
meet all of my living wage needs. I have no debt,
Yeah.
I wrote a book about this, and I
Yeah.
think, "Okay, right, I'm good." But along that path, nobody taught me about how banks create money or
Mhm.
how the stock market actually works or how the Dow Jones is just as composite of 30, like, primary stocks, which have changed over the last 70 years, on and on and on. And I'm like, wait a minute, I haven't actually had any understanding of ethical
Yeah.
investment and yes, on paper and spreadsheet, things look good. But now I'm conflicted, or actually, more importantly, now I'm encouraged that there's a better way.
Yeah.
And
Yeah.
there's a longing, I think there's a longing out there for a different way of, I would say, becoming each other's bankers,
Mm.
finance, thinking about really cool things like regenerative agriculture.
Mm.
Oh, as I taught our daughters, was a social worker, burned out social worker, Nancy Rubiliak in our neighborhood, who's started baking sourdough as part of her therapy from her
Right.
own trauma. And
Yeah.
I would bring her to my class and I say, Nancy, how did you start out? Well, I started out by capturing wild yeast from the air. And my sourdough became so famous, rich people in Chicago would have it flown from Edmonton. I'm like, that's insane. And
Yeah.
anyways, it was so interesting. And I would tell the girls, when you buy bread from Nancy, you're supporting Farmer Joe who's harvesting indigenous red fife wheat.
Yeah.
And on and on. So every dollar transacted is a relational
Yeah.
experience that you're supporting. And that's cool. So
Yeah. Yeah.
anyway, there's so many cool things we could talk about, but
Yeah.
guess my point is we are all socialized in this narrative, right?
Yeah.
which we followed because we trusted the experts or
Yeah, our teachers.
our teachers, our mentors, our bankers, our
Yeah.
investment counsel, and
And our cultural stories too, so much of what we get presented as literature, drama, comedy, rock and roll,
that's right, rock and roll.
it's all about it. So
Yeah,
yeah, I mean, I think you're touching on the cruxes of the things, and maybe here I'll more fully answer my question about what happened when I looked at my own so-called ethical investments. But I want to just really underscore a couple of phrases you use because they feel really powerful. One was around becoming each other's bankers. That's very powerful when we think about what money is for. And then you also talked about the relationships, like when you're buying that sourdough bread, there are relationships there with the growers of the grain, with the producer of the bread, with the people who are going to eat it. And we could do that indefinitely, right? We could like take the devices that we're using to have this conversation and follow the transistors and resistors and bits of plastic into the very vast global supply chain, and it's just a universe of relationships. That's a fun mental exercise. And I think a lot of companies, when they were getting deeper into sustainability, that notion of like traceability, of supply chain responsibility, that enters the arena and it becomes part of it. But what is really fundamentally missing in the way we were mostly trained, I'm saying we, I'm making some assumptions, pretty much everybody I've ever met, with a few small exceptions, we were not trained to recognize the relationship between money and everything else other than what we can buy with it or
that's
what we owe, what the transactional nature of money. And so we lost the connection. And then even if you put money aside, we also were generally not raised to notice relationships more broadly, other than like ways we could get ahead or ways we could get a better mark in school or please our parents or not get in trouble or find the cool kids or whatever buttons we were taught to push to have different types of relationships. But we were not really trained in the genuine sense of being in relation or understanding our relations, all of our relations. And then, very, therefore, super missing from that equation was being in right relationship. So
yeah.
it's one thing to recognize we have them. And then it's another thing to be like, is this a good one? Is this healthy? Am I contributing into this relationship in a way that brings benefit? Am I receiving benefit in a way that deepens my sense of integrity and wholeness? These ideas were like not really part of our mainstream STEM education or, phonics or whatever. So that's missing.
That's one
Um,
thing, yeah.
yeah, go for
I
it. You want to jump on there?
go for it. I'm gonna riff on that because here you are in the mystical, I'll call it the mystical Manitoulin Island. People are, "Where's
Mhm,
Manitoulin Island?" It's actually an island in Lake Huron, and I met you because I'm working with one of the nations, the Anishinaabe Nation, or Whitefish Lake in English, and near Sudbury, where you went to high school.
mhm,
They have taught me, in working with First Nations, that when you go into a sweat lodge, you say, "All my relations." Like, why
mhm,
do you say that when you go to the sweat lodge? Because in when you enter that sweat lodge, like entering a church, you're cognizant of all the relations that led to you being here.
mm,
Great grandparents, and then of course for them, there's no such thing as money or even scarcity. So then we use this word called making money. And I'm like, that's a lie
mhm,
because you actually are not making money. You're earning a salary, but as an economist, where does
mhm,
the value of the dollar relative to quantity on the demand supply curve actually come from? And
mhm.
no one explains that to you.
Yeah,
It's a lie that we're making money, yet we're socialized, as a teenager, go out and make money, be a productive person. And when you hit 65, you'll be happy, right? No, no, no. You were happiest when you were 10 years of age,
yeah,
says this research, right? But yet we spend our life making money,
yeah.
hoping that it will satisfy our deepest longings of those relationships that we actually want more of, which is a source of authentic happiness.
Yeah. And yet, back to my trip to the hardware store, if I need a fitting for my garage door, I shouldn't steal it. And I shouldn't expect the hardware store proprietor to just give it to me. So I got to pay for it. And so, how do I pay for it? And this leads us to the very practical universe that most of us inhabit, where we do need to have access to money. And then, understandably, many of us endeavor to have access to more and then save some so that there's more. And so that led me to looking at how was I saving my money.
Mm-hmm.
And there's a bunch of gory details that I think I'll just set aside in terms of some of my personal journey
Oh yeah,
around
we
being divorced and getting on the short end of
we
the
know
financial.
about your New York situation,
Yeah.
and I
Let's,
mean, just
we
just
could
surviving
gossip.
New York economically must have been like, wow, like
Not only did I survive, but I survived supporting the other half of that.
yeah, that's right.
So
But
I
you
could
you
I could dig
flourished,
dirt.
and you
Yeah,
end up in Montreal, and you guys end up talking about the service-berry economy, and it's like, wow.
that's right. So I feel like I benefited from some of those struggles. So, but then I get myself to Montreal. So I leave New York City, frankly, because of that divorce and because managing two households in
Yeah.
Manhattan at the same time was a little punitive, even though I was at that time still making good money doing the mainstream sustainability stuff. I get myself set up in Montreal. And in those years, so this is sort of 2018, 2019, I'm just kind of hanging out my shingle from the other side of the border. I'm Canadian, so it was a fairly easy transition back to this side of the border. But that's when the light is really going on that, this work doesn't make sense. I'm seeing more and more really concrete proof points that we are not we're not only not moving the needle, we're not even pushing the needle in the right direction. And I basically realized I would have a more positive impact from a sustainability and corporate responsibility perspective if I did nothing than if I kept working hard on these very ambitious projects with global companies and executives. That was a very awkward realization. But anyway, I can back it up, and part of where I'll back it up is by telling you what I discovered with my own savings. So time marches on. The reason I was having to take a close look at my own personal savings assets was in no small part because of this divorce, which required a separation of assets and all the things.
Yeah.
So I did a little bit of like shuffling here and reorganizing there and emptying my piggy bank over there. And then I was like, okay, phew, like we're on the other side of that. That was messy, as anybody who's gone through divorce can, well, maybe not anybody, but I'm sure it's
I think most
sometimes
people
messy.
can say that it was.
Yeah, unfortunately. Or fortunately that there was, something to carve up. And then I'm now at the kind of starting from scratch, getting my ducks in a row stage with my own entirely independent financial circumstances. And what that prompted me to do was look into an investment, an RSP, so registered retirement
Yeah.
savings instrument, which is what we have up here in Canada, tax deferred, kind of like the US equivalent of a 401k that I had tucked aside before I moved to New York City.
Mm.
And it wasn't scads and scads of money, but it was worth paying attention to, and it frankly was all I had at that point. And because they have a fiduciary responsibility around transparency, around investor communications, around all the things they're legally required to do, uh, asset managers have to disclose a bunch of things to various parties, whether it be the regulator, the Security and Exchange Regulator, you probably know way more about this, or to the actual investor, in this case me.
Yeah.
They have to write a bunch of stuff down and make it findable. And so others among your listeners might recognize this, where you get in the mail once a quarter a big chunky prospectus. It's a like a
Yeah.
old style phone book. It's so chunky sometimes, full of all the required disclosures that they have to tell you. You probably mostly can get that online, but if you've had these things for long enough, you didn't, check
Yeah, I
the
didn't
box for
get the
that.
like, I just want digital, thank you.
Yeah,
I need
but
the fire starter, by the way.
it's worth having the big chunky thing because you look at it over and over and you go, oh, okay, they're doing some homework, they're doing some things. Well, finally, in January 2024, so about a year and a half ago in terms of where we are
Yeah,
now,
yeah.
I'm just finishing dusting myself off the financial chaos that was the divorce and the cross-border move and whatever. When I've got one of these prospectuses that's come in my mail and it's been sitting on my kitchen table waiting for me to do something with it. And up until then, all I've done is recycle them. I'm like, I've cracked them open and thought I should take a look. And then I'm like, I don't know even what I'm looking at. My eyes are glazing over. Recycle. But on this particular January day, I said to myself, you know what? If I can write, which I do, I write a lot of public stuff about transparency, about responsibility, about, suck it up, buttercup. If I can say that out loud to my industrial community, surely I can read the prospectus that discloses the details of my own personal finance.
Yeah,
So
yeah,
I was like, Smith, sit down and read this from cover to cover. And if you don't understand it, ask for help. So I did. And what I left out here was, and by the way, details, including actual data and fund lineup and everything else, are in a story. It was behind a paywall, but I just took my paywall down for reasons that are not related to a healthy business model. So this is, if you have show notes, we'll put it in here. It's called something like why I left the markets and finally owned my shit, or something like that. I should remember what it's called, but it's on my Substack called The Material World, and all the data is here. But let me give you the
that's
quick
your
sum.
Substack, Material World.
That's right. Material, but material is spelled real at the end. So
Oh,
REAL as
thank you.
opposed to IAL.
Thank you for that shout out. Yeah.
I had been invested from my early days in corporate sustainability, which I began at the beginning of the century. And I was tapped as an employee at Canadian Business for Social Responsibility to put any RSP funds into what was then called ethical funds based on the West Coast. They
That's
were sort
right.
of a pioneer in socially responsible investing. And they had all these negative screens, no fossil fuel, no this, no that, the other.
They were
And I was like,
linked to Van City as well. Yeah.
yeah, yeah, exactly. And this is kind of common practice, but in
Oh,
2002,
wait.
2003, it
That
was
was that was
seen as pretty cool, right?
very cool.
So I
Yeah.
was like, good on me. I'm going to do that. So that's where I put my money. And then bit by bit, I added a bit more. And then Ethical Funds was bought by these guys and split up by those guys and whatever. Fast forward to January 2024, I'm looking at the prospectus and it's now called NEI. I think just NEI or
Yeah.
NEI investment, something like
Yeah.
that.
Yeah. Yeah. We
And they're still positioned as, pioneers in ethical investing. So I'm like, cool. Well, even though they got bought and sold and whatever, glad they're still ethical. Let's have a look. Where has my money been invested for all these decades? Well, first of all, just finding that was hard to find, but I was able to find a little bit. For instance, I had my portfolio at the time, a big chunk of it, such as it was, not really that big, in a fund called, I believe it was the Sustainable Balanced Fund. And
mhm.
as you know, these funds are usually made up of other holdings, right? It isn't just one pot of cash, it's broken out across a number of holdings. So the Sustainable Balance Fund had, my numbers are going to be a little foggy in my head because it's a year and a half ago, but something like 44 individual holdings, one of which was the Environmental Leaders Fund, another NEI fund. So, and that was the bulk of the Sustainable Balance Fund was held in the Environmental Leaders Fund. So I was like, oh, are you, okay, hang on, what's the Environmental Leaders Fund? So I hop over into the other pages, flipping through 100 and some odd pages to get to the Environmental Leaders Fund. And I'm like, well, what's that? And it's a whole nother dozens and dozens of holdings. And so over here I have my fund, Sustainable Balance Fund, which wasn't huge. It was something like 150 million, like, a lot of money, but
Yeah.
not crazy money.
Not a big.
But it's invested in the Environmental Leaders Fund, which is billions. So
Wow.
it's invested in this way bigger fund, which is like, oh, well, how much? Okay, I don't totally follow that, but let's see
Wait,
if I can just take $1 and follow it, right? So then I
sorry,
go
did you
over
say
into,
it's not like Berkshire Hathaway, it's like an NEI fund.
it's an NEI fund. It's the
So it's
NEI
invested,
Sustainable Balance Fund.
right.
Invested in, or at least one of the holdings is the NEI Environmental Leaders Fund. So then I'm like, what the heck is the Environmental Leaders Fund? And by the way, in this article, and I wrote more about it, I actually did up an infographic because I was like, I want to break this down. I want to follow this. Like, what is happening? So then I go into the Environmental Leaders Fund, and it's made up of a whole bunch more. I think this one had more holdings, like 144 or something. So I'm like, okay, who are they? Well, a bunch of the holdings are themselves financial institutions. And some of them are big ones, like Goldman Sachs or the IFC, right? The International Finance Corp.
Which is unbelievable. Goldman
Well, so,
Sachs, what?
so then I'm like, wait, you you hold a position in the IFC? Like, and that's environmentally leading? Like, where's my money? What's it paying
Yeah,
for?
yeah.
So once you go into, there are dozens of other financial institutions, and in my view, once you go into that, you literally can't follow the money. You can go then into the IFC and look at their disclosures. You can look at Goldman's disclosures, but you can't say with a straight face that you know what the money is doing. It's just like gone into this giant thing with lots of things going on. But some of the holdings were actual companies, like companies with a name, publicly listed, so you could look at their disclosures. And that's where I'm like, oh, goody, because I've just spent the last 25 years getting really, really good at public disclosures for publicly traded companies. So I'm like, I'm going to take a look at the publicly listed companies, go to their ticker, go into their investor earnings page, and look at what have they been up to? Who are they? Because they are holdings in the Environmental Leaders Fund with one of the most leading ethical savings instruments in this great big land we live in. So how great is this going to be? Who have we got? So I'm just sniff testing. I'm not even looking. I think I'm going to find really good stuff, right? I'm like, well, that's where my money's been. So it must be pretty good, right? It was disgusting, Mark. Like, for instance, I'll give you three that I just, and I was not looking. I stopped after a while. I was like, there's 144 of these suckers. I'm going to look at three because I'm doing this for free,
Yeah.
not getting paid. I'm tired. And by the way, now I got to get busy taking my money out of this. Uh, here are some examples, and these are written up. One of them is Darling Industries. I actually looked at them because I was like, oh, they sound nice. What's Darling Industries?
Darling.
They are, among other things, they're grown exponentially in the last 20 years. They used to have 600 employees. Now they have thousands. They essentially take industrial agriculture byproducts. Let's call it, to be technical, slaughterhouse flotation sludge.
Mhm.
And they turn it into biofuels, which meet the EU's green energy standards. They do other things. They say lots about what they do. But I find that really not environmentally leading to be sponging off the industrial ag industry, which
Right.
has so many spiritual and
Oh,
ecological gaps
yeah.
from from the wellness and healing universe,
Brutal.
that there are too many to name. And they are in the Environmental Leaders Fund. There's another one, Trimble. Trimble has a whole bunch of things going on. It has, like many large companies, it's got numerous business units, but one of its business units is ag tech. And I look closely at that ag tech stuff, and it's like sprayer technology and, things like how do we apply more chemical inputs to crops? That is one of the things Trimble is working on. So again, like you and I know, and probably anybody really paying attention with their stomach and their mind, they know the difference between agriculture that allows life to thrive, including our gut
Yeah.
microbiome and wellness and the world around us, and the like beaten down, soul crushing industrial ag, which has become the norm. And that's what Trimble's ag tech business unit is focusing on. And the last one, and this is where I was like, okay, I got to get out of this, because Trimble and Darling, I was just looking at their disclosures, and I happen to have an area of expertise where I can look at corporate disclosures and find them. First of all, a lot of people don't even know where to look, and then go sifting through, like, forget the sustainability bullshit. Just go straight to the annual report,
Mhm.
look at the overview, look at what they talk about as their risks, look at what they're saying to investors, right? That's what they're really doing. Um, but I don't know Trimble and I don't know Darling. I'm just looking at their publicly listed data.
Yeah.
But there was another one that caught my eye that I actually have done over the years some strategy work. It's been a long time. So I feel like, it's long enough that, whatever you call the, like, forget confidentiality, probably whatever I saw then has changed.
Yeah.
But I don't think it's changed in a regenerative direction. And that was a company in the flavor and the flavor and fragrance industry. There's several, a lot of people don't know, there's only a few players, but they are big, and they own the market for flavor and fragrance. And that means they own what your tongue thinks it's eating and
Mhm.
what your nose thinks it's smelling, from your laundry to your household cleaning products to your grooming products
Yeah.
to any packaged manufactured food item that either says flavor or spice. It is coming from one of the big three or four. They kind of keep merging and purging. And it was one of these companies. And I had done a strategy and reporting project for them in 2011, I think it was. So I know my way around those guys' disclosures, their business model, their strategy, their factories. They're wonderful people, by the way. There's some really cool people
Yeah,
there.
yeah, yeah.
but they are not environmentally leading. They exist. They literally exist to earn a profit by tricking our noses and our tongues into believing we're eating high-end chocolate when it's the same junky stuff, just a different flavor molecule, into believing our clothes are clean when they're just as dirty as they were without that scent, into believing our products are serving us in some way, so we buy more of them. That is their job.
Yeah.
And so you could make an argument that those companies should exist. I would argue they are degenerative and they earn a profit by degenerating our communities.
Mhm.
And I could say a lot more about that, but setting all my opinions aside, there is no room for them in an environmental leaders investment fund. They are not restoring the environment. They're not restoring ecological wellness. They're not measuring their impact on human wellness. They are running with the pack that is crappy.
So,
So
so I,
that is fun. That's where
I,
my most environmentally progressive funds were invested for a couple
so I
decades.
have a question.
Mm.
Given that you and I have been involved in things like GRI reporting, and that's
Mm-hmm.
conversation, how about that's being ring fenced right now? Uh,
Yeah.
is So within the leadership, um, portfolio, one would think that NEI would potentially report on the GRI scores of those companies if
Yeah.
they actually produce a sustainability report using the GRI guidelines.
Yeah.
And so you found that wasn't a commitment by NEI, presumably, or to use like the corporate knights ranking of companies using the Bloomberg data. You probably know about that. My friend Toby Heaps, like what
Yeah.
everyone thinks about what they're doing.
Yeah.
But it's interesting, right? So even if they have access to these sustainability reports by these companies,
Yeah.
they're not disclosing them, and
Well, Mark, I think it's even worse than that because, if you take Darling, for example, the one that's taking slaughterhouse flotation sludge, their own words in their annual report, by the way, uh, they would come out smelling like roses in
interesting.
with a thorough. That's why I mean I'm quite sure, and I put right in the article, and I will say right here, if I have made factual errors in my research, I'd really please get in touch. I make it really easy to get in touch on blorrainesmith.com. I would willingly publish a very humble retraction saying I got it wrong, and here's what the
So,
truth is.
so what you're saying is they might rank in the top 20 of the corporate knights sustainability corporate
They
list.
could,
They could because the
because
criterion are favorable or whatever. They're aligned.
that's right. And that's why they meet the EU green standard for renewable energy.
Yeah.
That is why they pass muster. Now, why does Goldman Sachs pass muster? Why does the IFC pass muster? I cannot speculate.
Yeah.
That is just like mental soup as far as
Yeah.
I'm concerned. And
That's-
I can't find an anchor there. But when I look at Darling, when I look at Trimble, when I look at IFF, International Flavors and Fragrances, I I can understand, because I've been there, how well-paid professionals are doing their homework and saying, we checked, it's okay. So the missing link is not effective disclosure. It's not adhering to the GRI. It's not a failure to do their homework. It's back to that mindset thing. So that's why I professionally left doing that work, and it's why I divested, and I can come back to that. But let's just make sure we're super clear on what's happening here. If I don't know how to ask for, like, I use this really
yeah.
dorky analogy, but I'm gonna use it here anyway, which is, imagine I have this idea that I want to go to a beach. I want to go away. I've heard there's this thing called vacation where you can go to a beach and it's sunny and you can swim and relax. And I've heard about it. My friends have talked about it. And it's a thing I want to do. And if I only knew that the place I want to do that is Jamaica,
Right.
I might go to Jamaica, but I've never heard of Jamaica. I don't have a map with Jamaica on it. The word Jamaica has never come into my mind. I don't know there's such thing as Jamaicans. Even if I did, I don't know how far away it is, how much money it was. I'm never going to go on vacation to Jamaica because I don't even know it exists.
Right.
So
Right.
let
Right.
me abandon the dorky analogy and come back to reality. Um, People are not asking, is this company working in service of life? When
Right.
we say environmentally leading, do we actually mean they are making our shared web of life thing we call the environment
Better.
healthy,
Just better.
right?
Just
They're not asking
no.
because they've never heard of it. So my mission, such as it is, it's maybe a strange one, but it sort of landed on me one day and hasn't unstuck, which is I exist to enable a higher number of people to not just have the thought that the economy could work in service of life, but recognize that as a very sort of rational and intuitively elegant thought towards which they have every right to work. And I say more people because it was my experience. It was around that 2018, 2019 kind of turbulence in my life when I was shifting places, I was shifting personal circumstances, and I was really digging into my work and doing more and more ambitious stuff and seeing how bad it was. Like I really thought, well, I'm just not working with ambitious enough clients, right? I'm just not working with a senior enough group. I'm just
Oh,
not taking on the
yeah.
big courageous stuff. And the more I did it, the more I was like, nope, that's still not working. The missing piece was the decision makers and the folks allocating the capital within big companies, allocating millions, billions, tens of thousands of jobs, having had the thought that the economy could work in service of life. And if they hadn't had it, and then asked what were they doing in service of that, they would not work towards it
So
because they were working towards something else.
that's right. So name dropping little people who think I were my mentors, and Ray Anderson from
Mm-hmm. Mm-hmm.
Base, who said, "I realize I'm the captain of the end of birth because I read Paul Hawkins,
Mm.
right? Green, what was it called?
Ecology of commerce.
College of Commerce, yes, right. You know, Ray says it was like a my my heart was convicted because I realized I was part of an industrial ecology, and no, sorry, an industrial complex of,
Mm-hmm.
the end of birth. That was as rough, bold as he would say. And even then, his experience and leadership in terms of trying to retool the production of industrial carpets failed
Mm-hmm.
in part. Well, succeeded, I think, conceptually because it's like, well, we can close all those, internalize all those externalities, and
Mm-hmm.
uh, and 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 instead of producing carpets for consumption, we would lease the service of the carpet because isn't that what people really want? If you're a hotel or
Mm-hmm.
institution that needs carpet, you don't need to. And I will then we'll end, we'll internalize, we'll even end the kind of, you know um, away kind of scenario where you just throw the carpet in a landfill and hope in 300 years it's actually broken down, right? So that attempt, I think, was noble. But
Mm-hmm.
what you're saying too is or BMW, if you've advised BMW, right, their attempts to ensure that every part in a BMW could, return back to the factory and be
Mm-hmm.
repurposed, right?
Yeah.
And my question then is, not to go too far down this rabbit hole, is
Mm-hmm.
why do you think that those efforts fail? What is it
Yeah.
about our, is there something else that's driving those kind of efforts
Yeah.
into the ditch because
Yeah.
they just don't make financial sense? Well, I don't know. They just don't make
Yeah.
business sense, right?
Well, I think about this a lot. Like, I actually don't even think it's a rabbit hole. I think it is the big wide open plain that we're all walking in, and
Yeah.
we don't necessarily recognize it, and we are in a rabbit hole.
Yeah.
And then
Yeah.
the moment where we come out and we're like, oh,
Oh,
there's this other world. And let me put a finer point on that. Like, and by the way, I recognize that again, we're having sort of an esoteric conversation. We're using language. We're comfortable. We're sitting in chairs indoors. We're not having our lives threatened right now. So it can be perceived as an intellectual exercise, but I also 100% expect that what we're talking about here is an experienced reality. And so I don't own the truth, but I really do stand behind what I'm talking about. So let me give some
Yeah. No,
specific.
you're an expert. You're a master in this.
Well, or maybe I'm just like willing to say things out loud that don't make
But
sense to
that
folks.
but
But I've
that's
had them.
hard, right? Like, a lot of us have left, I meet all kinds of people who've left that matrix. It was just a job, but no, there's a conviction that happens in your heart, and
Yeah,
it
yeah,
just David Corton, one of my mentors, right? It's like,
yeah,
like, wow, like, when that moment happens, why do you go to work, and what's
yeah,
the purpose of anything you're doing? And you think, there. I used to bug David. I said, there's still good people who work in Shell. Like, whatever you want to think about Shell, or good people go to work with meaningful, noble, I think, aspirations for their. They feel they're contributing something, and this is a good company somehow. And then
mhm,
one day it shatters, and
yeah,
then what are you, a corporate refugee?
yeah, that's right. Yeah.
You know,
Well, and I promise to ground this, but let's
yeah.
float for a moment. I also don't like, at the risk of kick me off the podcast if you have to, but like I don't hold anything more against folks at Shell than I do against folks at Patagonia. Like I actually see them as
I I agree.
like it's not even that there's a them. I'm not judging any one particular path or individual or industry. And I've seen scarier things happening in the so-called like super committed sustainability trenches and some really grounded brass tacks get shit done and help real people stuff in the mining companies and in the oil and
Absolutely,
gas.
absolutely.
So what's going on when I say we're coming out of a rabbit hole? Let me give some really concrete examples of the scope of the mindset shift I think we're talking about, which is why these things run aground. So that's the question I'm trying to answer here. Uh, have you ever do you know anybody or maybe you yourself who has motion sickness? Like if you're a passenger in a car, yeah, you know what I'm talking about there. So I don't think there's such thing as motion sickness. I think there are bodies that still are conscious enough to say, hey, we're not meant to go this fast, and I'm going to send up some alarms. And maybe you're going to barf, or maybe you're going to feel woozy, or maybe you're going to ask mom and dad to slow down, or whatever it is. But we've used our language, we've used our mindset construction to call it motion sickness and find ways to nullify it. Take this tablet, or we'll slow down and pull over, roll the window down, honey. Do you want to drive?
We've literally diseased.
That's right.
Even
And
the word dis,
so,
we name something, and you say, "Oh,
right.
I have." What, you just announced that I have this disease?
And let's take it one step further and stay with me in crazy town for just a moment because we have to come back to where we are. So, yeah, motion sickness is a healthy body saying, hey, other bodies around me, this is not an appropriate circumstance. I'm hurtling through space in a
Yeah,
potentially deadly weapon with other potentially deadly weapons whipping past me. And anybody who's been involved in a serious collision will know what I'm talking about. And if you haven't, talk to somebody who has. It's not safe. And as a result, my body is reacting. It may not consciously feel like that because from a very early age, we're told it's motion sickness. And then we take a bunch of steps to deal with it. And why do we deal with it? We deal with it because we've normalized a kind of, let's just call it a transportation network that is faster than most living creatures are designed to go. And it is industrialized with the purpose of moving us quickly, safely, depending on how you want to define safe, profitably, etc. And
efficiently.
then we,
Yeah,
what's that?
efficiently.
Efficiently, exactly. So we've monetized transportation and all the adjacent pieces that come with it, energy, infrastructure, and. I don't say that to judge harshly the automotive industry, for example, or the infrastructure, engineering, or all the amazing marvels of the modern world. I say it to make visible the mindset that we live in, which is a person has motion sickness, as opposed to, oh shit, we've designed a profit-driven industrial model that as a casual happenstance regularly puts our bodies in a state of alarm And then we've devised soothing systems around that. Now we have screens in our cars. We've got all kinds of like anti-nausea things you can take. Instead of going, hold up, whoa,
Yeah.
wait a minute, is this a good way to get human beings around?
This does
And
not
what would
support
it look
life, right? Is
right?
to your point.
And so that is crazy talk. So now let's go to, well, why did those initiatives fail? Because if you and I agree, by the way, the really ambitious ones, I think it's part of why I stepped out of mainstream sustainability, because even though like, holy shit, this is so cool, I can't believe they're going for it. Rember Interface's
Of
factory as a
course. So cool.
forest,
Yeah.
right? There were so many cool things they were doing, so many companies. We could probably name drop all day some of the really amazing and still going on, right? Like there's
Yeah.
legitimate innovation with truly marvelous Willy Wonka-esque, better than Willy Wonka, right? Like truly
Better
life.
than Lily.
But they're trying to hatch within, it's trying to be a clean fish in a dirty ocean. It's trying to be, I remember one of the dear colleagues that I got to work with on John's team, Richard Roberts. Hey, Rero, if you're listening to this, amazing human. And he used this analogy that just broke my heart, where he said, it's as if we're just trying to make nicer slave owners.
It's true.
And so we're fine with the slavery model as long as we're not too mean to the slaves.
Yeah.
And you could insert all kinds of details in slaves that could literally be enslaved peoples, but it could also be, you know, financially underprivileged people. It could be the ecological circumstances. But the point being that the system is not designed for the vast majority of life, but we could be a little bit nicer in the torture department. And that's why those systems fail, because they are trying to still survive within the slavery is normal,
Uh,
high speed.
That's right. And
Flirting with death is normal.
my mic drop is like, we're all debt slaves.
Yeah, exactly.
That slavery structure that we don't even know we're slaves. So
right. We are in the rabbit hole. So what's it like when you come out the other side of the rabbit hole?
you hug a goat.
Yeah. Well, yeah. So a question that I haven't answered yet. And so maybe I'll come to that question, to the answer now, which is, where do I put my money?
So what's going on now?
Yeah. Well, obviously, I'll offer some fine print, which I'm sure by now is like painfully obvious, but I'll say it anyway, which is like, I'm not here to offer financial advice, and I'm not here to propose anybody do what I am doing. I'm simply sharing, as a sort of citizen of Earth, what I have been choosing, and it is an active verb. Like, until I die or leave this iteration of self, I imagine this will constantly be evolving.
But literally, let's put a fine point at literally the last 16 months, right?
Yeah.
Your story is still unfolding.
Yeah. Oh, yeah. It's active.
Let's go for it. Like, so what's happening?
Yeah. And I moved from Montreal, and that was very serendipitous that I had a chance to move close to family and stop being a renter and start being a homeowner. If any of the people involved in my banking circumstances are listening, they're like, wait, she swindled us. What? Yeah, she's not good on paper now as she was. So what I did was, here I am going to be personal, and I'll just dig my own dirt. So I won't throw anybody else under the bus. And it's a bit humbling to share this, but it's also true. So I don't want to pretend there's some like easy button and, just follow these 3 steps. But first and foremost, I just reckoned with where the money was in my retirement savings as much as I could. So as I mentioned, I wrote more about it, and I shared some of the highlights, but I went right to like what is the breakdown of my portfolio, and can I see where that money is invested? And the deeper I looked, the less I liked it. I did not find a single holding where I went, oh, phew, I'm so glad it's there. So I reached out to the person who managed my account at it, sort of NEI, through Aviso, through Alterna Savings, a lot of fingers in the many pies, even in the credit union world, which is Alterna Savings. And I said, I would like to adjust my portfolio. I would like you to sell everything and put it in cash. And I told him why. I shared the article. Bless him. He's, of course, since quit that job and moved to North. I was like, I'm happy to talk to your team. I'm happy to share what I learned. To his credit, he was gracious and said, really appreciate that. You obviously have some strong feelings, and we might take you up on that. They never did. I also called the NEI 1-800 number because there was some information that didn't match up that I couldn't find. And it said, if you have questions, call. So I'm like, I have questions. I spoke to a woman who was so helpful, but couldn't actually answer my questions. She was very kind, very generous, took a lot of guesses, said, we'll get back to you, never did. Um, so I said, yeah, I know this is probably not what you would advise, but please move it all into cash. And he said, I can do that. Like, it's your money. You have the right to do that. He said, I have to tell you that, first of all, the second you do that is the second your asset begins to deflate. So not only are you not gaining from compound interest, you're not even keeping up with inflation.
Right.
And furthermore, he said, there will come a time, he said, it'll depend, but there will come a time where I, meaning the fellow I'm talking to, will be audited to check why I am not maximizing my clients' returns. Because of course, his job, his
Of course.
fiduciary duty
Yeah,
is
yeah.
to maximize my returns, to make sure I am adequately informed, to make the best decisions, to make the most money. That's the job,
That's
literally the job. So I said, I understand. I'll put whatever you want in writing that says, no, no, I told you to do this, and I'm asking, and I'm giving you permission, and I'm in fact insisting. So we did what we needed to do there. He's since moved on, and somebody else has become my appointee. And then nothing has changed in terms of the investment. The only difference is that now, as I'm adapting my business model and figuring out who are the clients that are really willing to have these real conversations, to really look at their own business models within an industrial context and look at, what does it look like to either compost your business or genuinely have it emerge as a life affirming
Mm-hmm.
entity? What is truly involved in doing that, and do some mindset work, do some visioning, and set them up with the right kinds of people to go forward. That's not going to be me. I'm not the
Yeah.
engineer. I'm not the business model deviser. I'm the, if I may, I'm the visionary who helps you understand, who helps you see very crystal clear with your own data. So there are a few very brave clients who've come my way. I've been very blessed to be invited to speak, to share, sometimes in university context, and definitely in corporate context through some of my existing and new relationships. But I'm not yet my own profitable business. And as I said, I got to show up with fiat currency in a few places. And so that money is sitting in cash, and that's my own, I'm investing in my own program.
That's
Uh,
fantastic.
I'm also doing things like, and you saw this first person when you were here, I am seeking out the most, what I perceive as life affirming sources for my own needs. So, for example, I'm very blessed to live within cycling range. I don't own a car. So cycling and foot range of a couple regenerative farmers who produce incredible food and produce. As much as I can, I only buy what I eat from them.
Yeah, yeah.
So when I say I'm investing in myself, I partly mean in my own, keeping a roof over my head, developing my own business, making sure I'm
But
continuing to do research and learning, but also in living,
but
keeping the
you're
roof over my
supporting
head.
through your, it's like you've adopted your money, your life, Vicki Robbins' book. And it
Yeah.
feels like you could write your own book on from an investment.
Yeah. A few people have suggested I do that. But by the way, a number of people have asked, and so I'll just imagine you asked and I'll answer, but what if you really wanted to invest, right? Like, what if you really had scads of money? Now, suddenly my business, fast forward another 18 months,
Yeah.
the well-paying clients are coming my way because I do a fair bit of pro bono work. But now, the well-paying clients are coming my way. I'm flush with revenue. And I've got money to invest. I'm speaking imaginatively here. Where would I put it? And that gets asked a lot. Um, I have an answer to that that's a moving target, and I want to explain why it's moving in case any of your listeners have agency here. There's some really amazing financing going on locally in Ontario, across Canada, around the world, where capital is flowing into people who are changing how they farm, changing how they educate,
Talk
change
about
all the things, right? It's happening. There are
that.
in Ontario, what comes to mind, and we can put this in the show notes if it's allowed. There's the Fair Finance Fund. And they're an example of an organization that is issuing bonds that are helping to underwrite new, what I would call regenerative food system work. And
Beautiful.
in some cases, it's new businesses. In some cases, they've been around for a while. They actually finance part of my sister's microbrewery here on Manitoulin Island, Split Rail. And I'm not
As
here to
part of that
promote.
part of that bond instrument.
Yes, exactly.
So this is for I'm sure we'll do part two of this conversation.
Yeah,
We got
I
3
know. I know.
minutes.
Yeah, we're hitting time.
But
But
but your point, right? So your point, I think, is we do have we do have the existing financial tools to
We do.
purposed or reimagined to support life, whether it's bonds or banks that actually create loans that support regen ag. And this is a project I'm working on with folks in Queensland, Australia, token
Yeah.
and all this new crypto stuff that's coming.
But
And
there's a catch.
there's a catch, yes.
Here's the catch with Fair Finance and others. Right now, if I wanted to divert my RSP money into any of those instruments, they do not qualify.
Interesting. There you go.
And they are considered, get this, too risky.
But
Even
so, and
Mm?
you know this truth too. You can't hold physical assets in your RSP, can you?
You can have real estate, can't you?
Not physically. You can't have physical bullion like gold or silver in your portfolio. You can buy e-gold or buy stocks in gold companies, but you can't have physical, which
That's interesting.
it's a
I
very
thought I
weird
could.
preclusion, right? It's like, wait a minute. So it's not allowing you to have real assets. So if you
Yeah,
say, my land is my land that I'm sitting on now, I'm going to do regen. Where does
yeah,
it's a good book? Where can you treat it as equity or any form of investment?
that's right. We should do, yeah, we should definitely have a follow-up because there are really interesting rules around that. And I was talking with Justin Ebbis, who's the head of Fair Finance Fund. Hope I'm pronouncing his last name right. And we were talking with a few others. We were at an event hosted by Tim Nash, actually. You were asking about Tim. And we were lamenting that that is the current regulatory environment, that if you wanted to, you're allowed to have your RSP in Goldman Sachs. How many billions of defaulted loans do those guys underwrite every year? Right? They even
Exactly.
have a separate line item in their balance sheet for loan default,
Up
and
to
it's
of course.
billions. All the big banks have billions set aside
Oh,
for
of
loan default.
course. Yeah,
But these guys are considered too risky, even though they can walk right onto the field and talk to the farmer, talk to the business owner, talk to the families, and say, "How's it going?" So if I had nothing but money, I would be seeking out more and more social bonds and other debt finance instruments. But I would see that as still a little bit stuck in the rabbit hole where we need money to make money. And where I would really be going, and I don't know what this is like the caterpillar trying to describe what it's like as a butterfly, going like, I don't know, there's wings, I guess. We would be financing the end of finance.
that's correct. And
Yeah,
I know you got to run, but I think this is worth a sustained conversation. Uh,
cool.
and I think we could do a whole other hour just on stuff that I'm working on now, which is, can we, for example, if you look at the Sumerian and Babylonian civilizations, they had very sophisticated forms of interest charges on various debts. They had barley debts at 33%, but
Hmm.
they knew, algorithmically, mathematically, that a farmer who got in trouble, like your friend, so you have one bad drought year, and you
Yeah,
have to debt finance your way through that year. Within 3 rotations, you're probably going to be, and the yields are right. Presumably, the yields will outpace right that debt cost, that interest cost. But
mm,
imagine having variable rates of interest commensurate with each different type of asset class, knowing that you would never want to put someone underwater.
yeah,
So
yeah.
you
Imagine having interest where the more healthy you made the world around you, the less you owed.
That's right. And those emperors, those kings of Babylon, they knew they didn't want a farmer underwater because if they
Right,
had to fight a war with the Persians, they could count on Farmer Joe because they helped them out in the time of
right.
immediate need. And I think that's the world we could have again.
Yeah,
So,
yeah.
yeah.
Oh, Mark, it's always good to connect. Thank you
You
so
too.
much for having me back on
Thank
the
you
show. I look
so
forward
much,
to
Bonnie.
creating that world. Thanks, Mark.
Thank you. Next time.